Okay, let's dive in. We've been seeing something pretty interesting happening in the corporate world lately.
Oh, yeah? What's that?
Well, more and more companies are deciding to put Bitcoin, BTC, right onto their balance sheets, holding it as a reserve asset.
Ah, right.
Yeah.
That trend. It's definitely gaining some steam, isn't it? It seems like it was largely kicked off by, that one company's success with it.
Mhm.
Strategy.
Exactly. They kind of pioneered this whole corporate BTC reserve system.
Yeah.
And their success, well, it definitely turned some heads.
You bet it did. Seeing them do it and the market's reaction clearly inspired others.
Absolutely. Now, our source material for this deep dive, it really digs into this trend, but there's a twist.
Okay.
While it confirms more companies are jumping in, it also highlights some, let's say, significant skepticism. And it's coming from a pretty big voice in the Bitcoin space, Max Keiser.
Oh, interesting. Max Keiser. So what's his angle? Is he down on Bitcoin now?
No, not Bitcoin itself. That's the key thing here from the source. His focus is really on the discipline of these newer companies.
Ah, okay. Discipline compared to the original players. Like strategy.
Precisely. He's basically casting doubt on whether they can stick with the strategy when, things get rough in the market.
Gotcha. So he thinks they might not have the stomach for it.
That seems to be the core concern highlighted. So our mission today, sticking just to what our source tells us, is to unpack those concerns. We'll look at what's driving this trend, who some of these new players are according to the material, and why some analysts, Keiser included, have reservations.
Sounds good. Let's unpack this. Where do we start?
Well, first off, the source confirms this isn't just a couple of isolated cases anymore. It mentions dozens of companies are now announcing plans for a Bitcoin treasury strategy. They're following that playbook strategy laid out.
Right. And the motivation cited, it's usually twofold, isn't it? Something like protecting their cash reserves from inflation.
Yeah, protect the value of reserves.
And the other big one, potentially boosting their share price, hoping for that strategy effect.
Exactly. And the potential scale here is, it's pretty eye-popping, according to the source. It points to some analysts predicting this could lead to corporations owning 50% or maybe even more of all Bitcoin.
Wow, 50%. That would fundamentally change things, wouldn't it?
Absolutely. And you mentioned the inspiration strategy's stock price. The source says that seems to be the main trigger.
Makes sense.
It notes their stock just surged, hitting an all-time high, around $543 back on November 21st, apparently.
Yeah, that kind of validation from the market. It's hard for other CEOs and boards to ignore that. Makes the strategy look very appealing.
Very appealing on paper, at least. But like we said, this is where the source brings in Max Keiser and his critique.
Right, the skepticism.
Yeah, the Bitcoin maximalist, as the source calls him, recently voiced some pretty strong doubts, specifically about these newer companies jumping on the bandwagon.
Okay, so what's his core argument? What's his specific doubt?
His main point, based on the material, is that these newer players, well, they haven't really faced true adversity with their Bitcoin holdings. They just haven't been, quote, battle-tested by a long, drawn-out bear market.
Ah, okay. The battle-tested angle. That makes sense in the crypto world.
And he draws a really sharp contrast with Michael Saylor and strategy.
How so?
The material quotes Keiser pointing out that Saylor has weathered a previous bear market, that's key, but also how he did it.
Okay.
Keiser emphasizes that Saylor never sold. And not only that, he just kept buying even when his BTC position was underwater.
Right, that's the discipline part. Sticking to the plan, even when it hurts on paper. Keiser sees that as, proven conviction.
Exactly. A level of commitment he seems to believe is kind of unique to strategy, or at least totally unproven with these newer entrants.
He even has an analogy for it in the source, right?
Yeah, he calls strategy the Bitcoin of BTC treasury plays. It's the original, the benchmark, the one with the battle scars.
That's a strong comparison. Okay, so if Keiser is questioning the new guy's discipline, who are some of these newer players the source actually mentions?
It gives a couple of specific examples. On May 7th, there was Strive, an asset management firm. They announced they were becoming a Bitcoin treasury company.
Okay, Strive. Asset management. Interesting. Who else?
And then just a bit later, May 27th, the source reports that Trump Media and Technology Group, TMTG.
Oh, right, TMTG.
Yeah, the media and tech company. They confirmed raising, get this, $2.5 billion, specifically earmarked for buying Bitcoin.
$2.5 billion. Wow. Okay. That's a serious commitment. And we're just reporting the facts here as the source states them, of course.
Absolutely. Just relaying what the material says. It also mentions another company, Metaplanet, as one that had already adopted a Bitcoin treasury plan previously.
Metaplanet. Okay. And wasn't there something unusual about their stock mentioned?
Yes, that's a really curious detail the source highlights. Something about a Bitcoin premium.
A premium. What does that mean exactly?
It says Metaplanet's stock is trading, roughly, at a premium that works out to paying about $600,000 per Bitcoin.
Wait, $600,000 per Bitcoin?
Real.
Through the stock. But Bitcoin spot price is, well, nowhere near that.
Exactly. The source explains that this premium means investors buying the stock are effectively paying nearly 6 times the market price for Bitcoin exposure compared to just buying BTC directly.
6 times. Just to get exposure via the stock. Wow.
Oh.
Okay, I can see why that might raise eyebrows.
Definitely. The source notes this detail has raised alarm bells for some analysts. They're questioning if these kinds of sky-high valuations are, sustainable.
Yeah, no kidding. That adds a whole other layer of risk, doesn't it? Potential volatility for investors choosing that route.
For sure. And it seems really relevant when you connect it back to Keiser's point, right?
How so?
Well, think about it. If these companies are trading at these massive premiums and then the underlying Bitcoin price drops significantly, maybe their position goes underwater, like Saylor's did.
The pressure on their stock price could be immense. Much worse than just the Bitcoin drop itself because of that premium deflating.
Exactly. And that pressure could translate directly into pressure on their whole corporate strategy, which leads back to Keiser's quote in the source. It's simply foolish to think the new Bitcoin treasury strategy clones will have the same discipline under that kind of intense pressure.
Right. The test is different. The initial motivation, protecting reserves, boosting the stock, sounds good in a bull market. But are those reasons strong enough to make them hold or even buy more during a deep, painful downturn when their stock is getting hammered? Possibly because of that Bitcoin link and maybe a collapsing premium.
That's the core question Keiser seems to be posing, according to the material. Strategy under Saylor held firm. They bought more. The big unknown is whether these newer players can or will do the same when things get really tough.
Okay, so wrapping up the insights from our source material here, we've got this clear trend. More companies adopting Bitcoin treasuries, definitely inspired by the pioneer strategy.
Yep, that's clear.
But you have this experienced voice, Keiser, raising a really critical flag about the resilience, the discipline of these newer adopters. It's like the proven versus the untested.
Right. The strategy looks great when you see the early success story, but the source makes it clear, through Keiser's perspective, that the real test, the real proving ground, is surviving a serious market downturn.
Which kind of leaves us and you with a final thought to chew on, doesn't it?
Yeah, definitely.
If market conditions did shift dramatically, if Bitcoin went into one of those prolonged, deep bear markets we've seen before, what's truly going to drive these newer companies? Is that initial motivation, protect reserves, boost shares enough to weather that storm, especially when their balance sheet shows big paper losses and maybe those stock premiums evaporate?
Or would those pressures just lead to a totally different outcome than what we saw from the pioneer? Something for you to definitely mull over as you watch this space develop.